Dear ladies and gentlemen, thank you very much for inviting me to this conference. It is the first time I'm speaking at FIAR. I very much like Bucharest. I came yesterday, I took a stroll, and it is a really little Paris indeed. But let's get to the point, as we do not have that much time. Today I will speak about EU legislative update. Much has already been said by Michael, and I will try to touch upon some issues. First of all, as an introductory remarks, we know that the financial crisis has become a crisis of consumer confidence because of lack of transparency, low awareness of risk, and poor handling of conflicts of interest. That has meant that consumers across the EU have been repeatedly sold investment and insurance products that did not fit their needs. And existing legislation has not developed fast enough to reflect the growing complexity of financial services. I would just like to point a quote from Commissioner Michel Barnier, who is now the chief negotiator for Brexit issues. He said that in the aftermath of the biggest financial crisis in recent memory, the financial sector must place consumer as its heart. Retail products must be safer, information standards must become clearer, and those selling products must always be subject to the highest standards. That is why we have adopted a package solely dedicated to consumers so that they can choose financial products based on clear and sound information and professional advice, which puts the consumer's interest first. Let me reflect these to 10 years after the emergence of the financial crisis. We are now in a very different phase of the regulatory cycle, naturally influenced by the new political priorities of increasing investment and economic growth. And we cannot forget that the post-crisis regulatory agenda was the right response to restore the loss of confidence in the financial sector and in Europe and worldwide. Furthermore, to build up sustainable long-term investment economic growth, we need a stable and strong insurance sector that adequately prices risk, applies robust risk management strategies, and treats consumers fairly. European industry, as we all know, is much stronger with Solvency II. It is stronger because it has its capital better aligned to the risk it runs, because it uses more realistic basis to assess and mitigate risk, because it has what I think is one of the major things that have been done. It has upgraded its governance models with a completely different emphasis on the role of the board, the setting up of key functions, and the implementation of the own risk and solvency assessment. We have also, with Solvency II, basis for a more transparent industry with harmonized templates for the supervisory reporting and enhanced public disclosure. Only strong and well-regulated retail markets that place the best interest of consumer at their heart are necessary for consumer confidence and economic growth in the medium and longer term. New legislation, KIT, PRIPS, IDT, raises standards and removes loopholes for the benefit of consumer. Specifically, it proposes new consumer-friendly standards for information about investment, raises standards for advice, and tightens certain rules on investment funds to ensure their safety. About the EU legislative update, I will maybe now speak a little bit more concrete. Specifically, it proposes new consumer-friendly standards for information about investment, raises standards for advice, and tightens certain rules on investment funds to ensure their safety. The Solvency II directive, which started to apply in January 2016, joins now the KIT, PRIPS, and IDT directive in the field of insurance. The KIT PREPS purpose is to protect retail investors through the supervisory through the provisions regarding application to inform small investors. As to Slovenia, supervision of KIT PREPS has not started yet. We are in the preparation of the national law on the implementation of the KIT PREPS regulation, defining the powers to exercise supervision. Once this law comes into force, our agency will invite all manufacturers of life products to report on KIT PREPS. We all know that IDD intends to strengthen consumer protection, and what is also very important, it improves the competitive landscape in the European insurance industry. So the industry in Europe will get more united, and of course it is very important that also reduce cross-sectoral inconsistencies. This is based on principles of honesty, professionalism, performance in the best interest of the client. Insurance products must fit to the policy holder, and that is why it was introduced demands and needs test, assessment of appropriateness and suitability. And what is far most important, it also reduces the conflict of interest between insurance companies and distributors. What is the impact of IDD on the economy? Of course, for the customers, they can have greater comparability on the insurance products in the market, and there is equal consumer protection irrespective of the distribution channel, and also insurance undertakings are taking advantage of increased customers' trust in the insurance market, what is of utmost importance. And that consequently means also the increased stability in the financial markets. Supervision in Slovenia, we have insurance supervision agency separated from banking supervision and supervision of security trading. The competent authority for consumer protection in general in the market is Market Inspectorate, but we as agency, we do take care of the customer protection through our basic regulatory activities, supervision of insurers and distributors operating legally in accordance with the rules and the risk management. We do have also industry being very up to date. There are many activities within Slovenian insurance associations. There are seminars, trainings organized, meetings with industry. We have a very transparent approach in our authority with industry. We do invite them, and we have on a yearly basis cycles that we speak to management boards, because now regulator and insurance industry, they have to go more hand in hand than ever before. Basic EU legislative update. I will just shortly speak on GDPR, which is expected to come into force very soon, in 10 days to be more precise, on the 25th of May. And insurance companies often both control and process data, and that's crucial that they are very prepared to the new rules that come into force. Also, it is important that the senior management at the board level would be held accountable for any failures to implement GDPR requirements, and they cannot simply just delegate this accountability to more junior employees or the IT team. GDPR will also drastically increase the possible level of fines up to a greater of 20 million or 4% of total global turnover of an undertaking. Since many insurance companies have a presence in multiple countries, this threat to global turnover should propel data protection concerns. to front of the mind. What are the risks and opportunities for the insurance sector? The high level of mergers and acquisition in the insurance industry poses also a particular challenge for the insurers, as they need to either harmonize legacy systems to provide uniform data protection procedures, or else they need to train staff to manage data protection over multiple systems. As policyholders often switch to insurance providers, catering for the new data portability requirement is crucial for insurers when customers decide to take their business and data elsewhere. I'm speaking in particular about using data controlled by third parties, like for example Facebook posts, to assess individual premiums that can potentially open them up to liability as data processors. Insurers, on the other hand, may benefit from an increased uptake of cybersecurity insurance policies, particularly by business dealing with large volumes of personal data. Major challenges from a regulatory perspective. Adopting the supervision strategy of our agency to the new IDD provisions and the supervision process itself. We have to find a compromise where specific provisions do not fit perfectly, because from different NCOs from one another, this can be a challenge because of different legal systems. And we have to find the right limit for disclosures and this transparency from the consumer protection point of view. Also, major challenges from a regulatory perspective is, of course, regulators will continue to expect an overall strengthening of core risk management in governance, control practices and reporting, in particular in the areas of cybersecurity, third-party risk management, and key regulatory challenges include cybersecurity and data privacy, risk management, governance and control, and very importantly, conduct and culture. To reflect further, just I have here 3-4 a little bit provocative questions to be discussed. This is maybe also could be an opening remark for the later section that speaks on that will be on the digitalization. It is also, could IDD provoke a battle between robots and people? It is actually robots can capture and process customer demands and needs. Can they do consulting? The reason why is to desire to master this process and process this data accordingly. Where does the IDD possibly prevent the use of robots? Of course, it is about advice. And advice is to make a personal recommendation to a potential policyholder. And here's a question, can a robot give a personal recommendation? We have to be particularly clear about adjective personal, which is actually a very individual, private and personal opinion. Advantages and risks. Of course, it can be a little bit more cost efficient. It can mean increased accessibility of products and services to a wider consumer base. It can improve quality on one hand, but there are also many drawbacks to this. Consumers who have limited access to information or limited ability to process this information, this can provoke legal disputes due to unclear sharing of responsibility. Is a discussion on social media and advice. This is again something to be discussed. It is important that also we have on social media, if somebody is speaking about insurance, it can also contradict to freedom of speech or on one hand, but on some occasions it could also might be taken as an advice. What if some consumers become uninsurable? Fast evolving technologies are changing our lives, the way we communicate and purchase our products. And industry and regulators, they need to constantly adapt to the global environment in which consumers live. The use of big data, comparison websites and automated advice tools will impact the ways providers interact with consumers. The increasing amount of personal data available and the power of data analytics will inevitably change insurers' underwriting models, and we need to be aware of the potential risk associated with big data, such as access issues for consumers being classified as undesirable due to abilities to undertake more granular analysis. To conclude, maybe some of you have already heard about the connected cow. Connecting cows to the internet to monitor their behaviors and help farmers make better decisions about resources is a top issue. This connection of animals, data, processes, and things show how the Internet of Things of everything is impacting agricultural business. The devices are a common sight on farms, and the market for them has become crowded. Farmers are placing sensors on various parts of cows' bodies, and this is how they help to increase the productivity of their herds. The information that these sensors provide is opening up, of course, opportunities beyond increasing the productivity of herds. And how to transform a regular cow into a 21st century connected cow. The farmer simply fits a wireless tracker on either cow's leg, tail, anywhere else, and the tracker sends data to an application and onto the cloud for processing. How we can connected cow to the insurance. This connected cows is a great example of using big data to get great results. The thing most likely to hold back progress for humans, of course, is our skepticism about how this personal data is being used. And this in turn makes us a little bit unwilling to share all data we have. Unlike cows, we want to say in how our data is tracked and utilized. In insurance, the analysis becomes increasingly precise and personal. Insurers will be able to offer more effective, customized products to consumer with greater efficiency. Increasing availability of data and sophisticated ability to analyze and process could enable insurers to segment the market to the point where it determines and undermines the fundamental concept of risk pooling. The question the regulators, just like the industry face nowadays, is where to draw this thin line. Of course, digitalization is a future that cannot be avoided anymore, also in the insurance sector. With this in mind, I would also like to invite you to the conference we will have in Ljubljana on the 13th of September, which everybody is very cordially invited, and we will further speak on digitalization, big data, cybersecurity, among other themes. Thank you very much for your attention.